will be answering all of your questions.
Yeah, thanks for that. I think it is
Yeah,
better, even
we'll
though.
see about that.
What?
Forgot it was called Dirty Secrets to Industrial. I don't know if I have many dirty secrets, but.
And I can give you guys all the dirty secrets.
All right, thank you.
Literally, I won't say which buildings or I won't be saying names, but I will be going in depth. So.
But yeah, so it's 4 after. Thanks for everybody for joining. We got quite a bit turnout, I think.
How many people do we have on here?
It's hard for me to see with the sharing going on at the same time. Give me a second. Yeah, I see 23 people. So yeah, usually we get about 20, 30 people. I think it's good that I was a little concerned just because like not a lot of people talk about industrial, even though I think it's just a shame that people don't cover it. But it's recording now as well. So we're going to get started, everybody. Thanks for joining us. Glad to see a lot of familiar faces as well. So today with us, we have Jennychang with Kander Pacific and Greg Olson with Hughes Marino. They're two of the top brokers in industrial real estate down here in SoCal. I'm going to hand it over to you first, Jenny, to introduce yourself a little bit.
Hey guys, nice to meet you. So if you guys don't know, my name's Jennychang. I work with Kander Pacific. We're located in the City of Industry, which is what I like to call it's the heart of the industrial area. And I manage, I do property management for over 100 million in assets for our company. And I also help investors, invest in their first industrial property. I also work with just business owners who want to also lease properties out here in LA. So just a little bit about me. And I'm friendly, so feel free to just, ask me anything. Not everything, but you know what I mean. Greg?
Perfect. Good job, Jenny. Well, I'm not as friendly.
Oh.
No, just kidding. So I work, might have a little bit of a different perspective in some ways, but I'm focused on the brokerage piece when it comes to, I guess, the occupier, whether you're leasing the space or whether you're buying the space as an owner user, and then also, obviously get involved with the investment side of it as well for groups, just looking to build their portfolios. However, I do not spend any time on, the management side or the leasing side for those owner users. Our company is specifically designed, to help and represent the occupiers of space. So I love kind of getting into the weeds, of what the market and what's happening right now. We're in unprecedented times. So I think we'll have some, fun things to talk about in that respect. And industrial, is one of those markets that, nothing's invincible, but it's proving to be, stronger asset, especially in this area than a lot of other real estate investments, especially in the last, this year, 2020, the famous year.
Mm-hmm.
Okay, great. Thank you guys for that intro. And for those of you that I haven't met yet before, my name is Jason Shao. I am the leader for Multifamily Masters chapter in San Jose, and I have a separate, smaller, more casual group down in Los Angeles as well. We do this once a month. We usually covers different topics in real estate, and I know it says multifamily, but I am a big believer, and I can't wait to get into this sector of industrial. I just think it is a lot unconventional, but I just think it's something that we would be remiss to not share some of this information with the broader audience real quick as well. So just a disclaimer, this is definitely a nonprofit. I'm not making any money on this, but we're here to share ideas and resources and connections. Please do your own research and due diligence when making an investment. There's risks involved. So that's that. And okay, we're good. I'm actually gonna stop sharing the screen. I think we're good now. So as we go along today, guys, feel free to just put in the chat. I'll keep an eye on it. Any questions you have real quick. And just to start with, type in the chat your either your current investment experience right now or what you know about industrial real estate. And to start off, well, I already asked you this before, Jenny, so I was gonna say ladies first, but I'm gonna go with Greg here. Can you just share with us a little bit, what are the different types of industrial real estate properties? I know there's, I hear the word flex, or, we hear a lot of these like big distribution centers, but, can you just lay the foundation for us? What are the different types of industrial properties?
Yeah, no, yeah, fair enough. Yeah, like you said, right, we've got logistics, distribution centers, so big box buildings with lots of, call them dock high doors. And those are, if you're not familiar with, there's dock high doors, which are, elevated so the trucks can back directly up into them. And they load their inventory that way. And then there's garage level or ground level doors. And those are the doors that either have ramps up to them or just, use a lot of smaller buildings just have a garage level door. They won't have a dock high door. So you've got those distribution buildings that are characterized by, high ceilings, high clear height is what they call the ceiling level. So you can get racking in the buildings, and number of dock high doors. But then you've also that fall into the industrial category, all manufacturing buildings. And, generally speaking, manufacturing buildings, typically have a lower clear height, lower ceiling, because they don't need as, much racking or inventory, but they also have a lot more power. So, generally you have upwards of 2,000 plus amps that are brought, power service that's brought to the building. Then you've got, your distribution groups, your manufacturing groups. And then there's, multi-tenant kind of industrial buildings that are, you can have 1 million square foot buildings that are multi-tenant in, distribution, but then also a lot of the asset class that, investors like a lot is this, multi-tenant industrial building that has a bunch of different smaller businesses. They all have, their own roll-up door or multiple roll-up doors, a small office in the front, and it has a lot of, all the tenants are, generally speaking, small business tenants. And, it's a very desirable, asset class because the occupancy is always so high because there's always so many businesses wanting these buildings. And a lot of that, space it's being converted into other types of uses. So it's just very high occupancy. Got cold storage warehouse facilities, right? So those are, for all of our food services, and that's becoming something that's going to be even more and more important as we start to people get comfortable probably getting groceries and different things. I mean, obviously the hotel and restaurant industry has been hit, so it's done different things for different groups, but a lot of the companies and investors I've worked with that are cold storage, they're looking to expand and grow right now like crazy. Jenny, what am I missing?
I actually had a follow-up question on that because we do have a lot of investors. So because you just explained a couple of the different types of properties, what will be a really great first, if someone wanted to invest in a warehouse property, what type of property would be the best?
Yeah, good. Yeah, it's a good question. I mean, I think you might say, well, I would say it is that multi-tenant industrial building. You've got, multiple groups providing, revenue to the space, and, small businesses, it's really desirable. I mean, it's got kind of, and also lenders too. They're going to hold you to a high occupancy, but it's just a really attractive kind of easy management, low management risk. And so, yeah, I don't know, Jenny, you probably agree. That might've been a softball. I don't know what you think.
Yeah, I was going to say, I agree with Greg. I mean, it generally, like if, I don't know if there's business owners in here that maybe want to invest in a food processing facility because they are in that space, then that would be something, worthwhile for them. But yeah, generally industrial parks, right, where there's multiple flex spaces. Flex spaces is basically just a warehouse and office, and we just call it a flex space only because you can do multiple things with the properties, which makes it a lot easier to bring in different types of businesses into your property.
Yeah, I'd just say to add on that, over the last 5 years, I mean, just to put it in perspective, I mean, every project's a little different, unique, but over the last 5 years in Orange County and LA, I mean, and other markets, or even Riverside, all these multi-tenant projects, I mean, they have waiting lists for tenants to move in. It's, they market it all, as a broker, I market it, I can look for space, but the reality is that space is being leased and backfilled by a tenant from a wait list before it ever hits the market. So it's just, it's going that way because those properties have been redeveloped over the years, right? It's now the highest and best use of that land was a residential property. And so that multi-tenant industrial space got torn down years ago in, 2014, 15, 16, some of those buildings have gone away. So it's just made the supply even smaller and made the buildings themselves more valuable.
Yeah.
So where are these properties? Like, how do you find them in your local area versus also, how do you find the investment opportunities or properties that are for sale? I'll go to Jenny first on this one.
Well, I mean, I guess if you're looking to invest, I just ask people, do you have a broker that you're working with? Because they would be the one to help you find the space. But I guess if you're trying to look on your own, I mean, LoopNet, I think everyone, if you don't know about LoopNet, that's one place that you can look for commercial properties. But the advantages of, using a broker like Greg or myself is that we have access to a lot more different properties that you may not see on LoopNet. So, yeah.
What about the actual locations? What should people look for? I mean, I'm trying to draw a comparison to residential, right? Like, and I think the tenant still is the same, like location. But for a good industrial or warehouse location, what are some good catalysts or drivers that make it more favorable than others?
Greg, did you want to go, or I can?
Yeah, I mean, yeah, great question. I mean, like residential, it's really, obviously location is really important. I think for the industrial space, and especially for these multi-tenant, freeway access, I mean, and where people live, it's think of all these as, as sole proprietorships or small businesses, or, they don't want to drive far to get to their office, get to their work. Most of these businesses, they have some inventory in the back, but it's not about necessarily moving that inventory. Most of these people are choosing where they want to be because that's where they live and that's where their customers, are. So yeah, any major streets and something I pay attention to, obviously as a broker, but even if you're an investor, just driving by these, you'll see these projects, and it's a little different, but how many cars are in the parking lot, right? all the spaces full? They're always going to have signs up that say that spaces are vacant. Definitely doesn't mean that there are any signs. It's just the broker leasing wants their name on the street.
Oh yeah, there's a little tip for you. So if you do see signs that, it says this building's for sale, for lease, a lot of times you think that they are available, but they are not. So always double check.
Yeah, residential guys do that too, where they'll put an ad or some flyers out there and says, buy this amazing house, and then when you call it, it's like, oh, that one just sold actually,
No.
but I have this other listing, So.
Yeah, so commercial brokers are known for that. That's a little dirty secret for you guys. I mean, we try to keep our stuff up as long as we can. So, but maybe if you're really thinking about investing, I I love the city of Industry just because it's so business friendly. I mean, to get a business license, it's free. Um, you know, if you go, Ontario is a great place. Chino, Southgate, Santa Fe Springs. Um, those would be my kind of like go-to areas if you're looking to invest.
What about you, Greg? Where do you recommend in the South Bay OC area?
Yeah, I was going to recommend what Jenny said. I mean, right now, you know, I can talk, but I mean, cap rates have been so compressed, and you know, there's not a lot out there. It's just it's a higher barrier of entry in all the Orange County, and you know, even in South LA. There, I think there's pockets. You know, even in Long Beach, Lakewood, Paramount, you know, I think are areas where there's some investment, you know, value add investment opportunities. But yeah, for the most part, Orange County right now, you're competing against, even for small projects, you're competing against institutional capital.
Yeah. And maybe just adding on to that, I personally also like to look at how friendly the city is towards, you know, your property. So if you're gonna try to get a project done, or if you're trying to have certain types of businesses in your warehouse, you know, you want to see, is the city going to let you do that? I mean, every property is zoned differently. So you definitely, when looking for a space, you want that to be maybe not so, I don't know, it depends on what you want, but light industrial, or there's certain properties that are just zoned, and it's very difficult to get certain tenants in just because it's such a special zoning. So just something to really look out for.
How do you gauge that? Or like, I mean, I imagine you go down to City Hall and ask everybody, are you business friendly? They're all gonna say yes. Right?
Right. Yeah. And that's where the experience comes in. I mean, I don't want to say which city is the worst place to invest in an industrial property, but there are some cities that they're just the way that the process of doing business there is a lot more difficult than, let's say, City of Industry or Ontario. Those are kind of like my two favorite cities to work with. So just, yeah, definitely something to think about.
Okay. So Greg, you mentioned earlier about cap rate compressing. What are you kind of seeing right now in terms of maybe either purchase or on the exit? What's sort of average? I know it could range a little bit, but I mean, again, drawing comparisons to multifamily, I think LA in general is maybe about 4.5 cap rate. How is it looking for industrial?
Yeah, I pulled up some numbers. I mean, I think,
Yeah.
yeah, I guess since you guys are accustomed to multifamily, it won't shock you as much. But
Maybe.
you know, just going back even 10 years, or let's see, the highest, yeah, going back 10 years, 2010, we're talking 7.5% cap rate on industrial in Orange County. Now, you know, we're getting closer to the exact number pulled 4.8. So I mean, yeah, between the 4 and 5% number.
Yeah.
What are you seeing in LA County, Jenny?
Yeah, I have 4.5 to 5.5.
Okay.
But this is just, sometimes I don't like to focus too much on the macro. So this is LA County. There's so many, I mean, when you actually try to find an industrial property, this is, yes, you can kind of have this as something to gauge it with, but every property is very special. It's not like a multifamily type of situation.
Not just the one Jenny manages. Every property is special.
Every property that you find, it's gonna have some special aspects to it. So it just really depends.
Yeah, I know. I mean, there's so many factors. I think it's just a quick pulse of the market, and I think like what Greg said, that is really helpful too. I mean, honestly, I was surprised when we talked, Jenny, and you and I, how low it could be. But I think because just interest been going down, and a lot of other factors too, because I thought industrial is still like in the sixes or something like that. So so we talked about cap rate. Let's take the multi-tenant type of properties you guys mentioned. What would be a reasonable expectation? Again, there's so many factors, but what kind of purchase price do you think people would be looking at? Is it something that an individual investor could possibly take down, or it's higher, a bigger price tag where they likely need to syndicate? Jenny?
What was, I was trying to look up something as you were talking.
It's
Sorry.
okay. Greg, if you
Yeah, I'll
want to
just chime in on like, yeah, and I think, yeah, it probably is something you syndicate. It probably is something I mean, it's, yeah, like you said, every project is entirely unique, but I mean, let's call it a $250 per square foot number. And let's just say, obviously, construction and value drives these developments when they happen. So, I mean, you're not going to find many projects, less than, let's call it less than 10,000 square feet, really, right? So, and maybe that 10,000 square foot space has, it's a small building for a multi-tenant, and maybe they have five, six, seven tenants. But yeah, you're talking what, several $1,000,000, and in financing and investing, you're probably putting down 25, 35%. So it's, it's a significant initial investment.
I was just gonna say that the price range, I have like 190 to like 220, something like that. But again, it just depends on when you're actually looking for the properties.
Okay.
So.
Yeah, and that was just the crazy thing too. I mean, just to put it in perspective, right? We talked about, I mean, it's happened in multifamily, but industrial, let's say, just in 2000, there's different but 10 years ago, 2010, between 2010 and 2013, I mean, we're talking sub $100 per square foot numbers. And so over the last, since 2015 up till now, end of 2019, we're not really sure what's happening 2020. But that's where you've seen that uptick in Orange County and LA from that less than 100 per square foot to now 250 plus per square foot. So.
What about the actual price tag though? I mean, I know it's such a broad and not really fair to ask, but say if you're investing by yourself, can you reasonably expect to find something, say 2 to 5 million, or are they all like 10 plus million or 20,
Yeah, I mean, no, if you want to do like not like a multi-tenant situation, maybe it's just one tenant, could be maybe like around 5,000 square feet, a couple million, 2 or 3 million.
Yeah, I think that number it's 2.5, like as the lowest kind of it's 2.5 million kind of at the lowest end. And then, but yeah, I think there's, between that and 5 million, I think there are some.
Okay. So there's reasonable, opportunities in that price range, possibly.
Yeah.
And I could also add on, if you look at one of those industrial parks where there's multiple,
like an industrial condo almost kind of.
Yeah, I mean, you could just invest in one of those as well. I mean, I've seen them go for under $1 million.
Okay.
Just in like Walnut or just in this area.
Yeah. Greg, do you do leasing as well, or only buying and selling?
Yeah, leasing as well. I would say, yeah.
So we'll start with you here. I mean, again, using multifamily or residential as the comparison, once we buy a property, I guess actually, first of all, what are the financing options? You earlier you mentioned about 25% down. Are people getting commercial loans or SBA loans, or what are the financing options people have in this space?
I think Jenny has an answer for that.
I actually just spoke with a few loan officers last week. A lot of the bigger banks are not giving out a lot of loans, especially to first-time investors or people who aren't seasoned yet. But if you go to the smaller banks, they are trying to push things through. So if you are looking to invest, don't go to the larger banks. I would say go to the smaller banks. Bank of California, there's GBC, East West, some of the lesser known, not like nationwide banks, pretty much.
Yeah, and small and a lot of clients that are buying buildings, as investment. Let's say it's an investment for the family, but they're putting their company there or one of their companies in one of these multi-tenant. I mean, yeah, they're also trying to capitalize on some of the SBA loans and banks that, like you said, smaller banks, the private banks that are generally focused on and have programs for that.
Yeah, and I guess if okay.
Okay. And then we actually, we already touched on, how once we buy it, we hire a broker, likely try to find tenants for this. What about some of the amenities or value add component to this? Like what are some of the amenities, whether it's a loading dock and all that landlords and investors should put in place to attract maybe better or more tenants?
Something that I run into all the time. Sorry, Jenny, if I mean, as far as upgrades and improvements go, fire sprinklers, right? The buildings, when they were built, they didn't have to have them. But now most uses and most cities even regardless of what the use is, require that. And so that is something about, even business friendly places where the building's been there forever, the tenant's been there forever, and the city decides that they need to now be fire sprinklered. And the tenant has to go find another building, and there wasn't necessarily a space for them. So it's a costly, but I think definitely pays off.
Jenny, anything to add on that?
I think this is where it's different from owning like a multifamily. I would say you don't have to do much. As long as the basics are there. I mean, fire sprinklers are a big thing. Definitely look out for that. But generally not too much, not too many things. One thing that I can say is if you are looking to invest, maybe choose, as long as you purchase something that was newly built, right? Then there's just less things to work on. A lot of times some of the older warehouses, right? Greg kind of mentioned it, but a lot of them were built when there weren't a lot of laws. So people just kind of built it out however they wanted to. Some of the loading docks aren't even to code now, right? So some of the bigger trucks, like the 53 footers, like can't even really properly go in these dock highs. But generally, if you just stick to a little bit more of a newer warehouse, you won't have too many issues. Knock on wood. There was that disclaimer in the beginning, so with a grain of salt or whatever. But generally, not too many improvements.
Stay with you a little bit, Jenny. I mean, is there a quick and dirty way to formulate what kind of budget? Say it's missing fire sprinklers, or like how do you? Okay. Is there a way to sort of formulate the budget, or what? How much additional rent could you possibly get for a fire sprinkler building versus non-fire sprinkler?
I'm like, should I say the truth?
Yes. It's not like we're on the internet and everybody's watching or anything.
So let's say, right, even though it is live, right? So let's say, true for example, by the way, let's say you own a very old warehouse, right? There's tenants in there and they've signed a very long contract, and they realize that they can't operate their business because the fire sprinklers aren't up to code, or they wanted to do a high pile permit and the sprinklers are just, they're not the right ones, or they're old or whatever, right? under the lease contract, it is up to the tenants to sort of take care of those issues. So on one hand, it's what am I trying to say here? I feel like I want to say it, but I don't want to say it. Greg, help me out here.
Well,
You know what I'm trying to say, right?
since I work with and represent a lot of tenants, I think, yeah, I look at a different perspective, but we can talk about, maybe back up a little bit and talk about the types of leases that you have in these industrial spaces for these multi-tenant buildings, and just even industrial building in general. It's typically what's called a triple net lease. And so that lease, you've got a base rent, and then the lease is structured in such a way that all of the expenses for that property, so let's say you're the investor, your taxes, your property insurance, your property maintenance, your electrical bill for the exterior lights, the gardener, all of that, your property management even, all of that is passed through to the tenants in your building for their proportional share. So if you had 2 tenants in a building, all of those costs are passed through the tenant, and they pay that in addition to their base rent. So I guess and also the way industrial leases are structured is when the tenant is occupying that building, they are basically in charge of everything. They have to act as if they own that building. They're in charge of everything within that building. Something breaks in the building or something, and it's not one of the exterior walls, the tenant has to deal with it. So, kind of what Jenny was alluding to is, you get the tenant in there, and the way these leases are structured, and I represent a lot of tenants, so we work on tearing these leases apart. But typically, the way this lease is structured is very favorable, to the landlord in a triple net lease, because there's low risk and low exposure because you're passing that through to your tenants.
Yeah, I mean, I could see maybe what was Jenny getting to is it could be a little awkward depending on which side of the table you're on, if you're on the landlord or the tenant. But like what Greg is saying, it's a lot of this. You need 5 sprinklers. Okay, cool. Give you some allowance, but it's up to you to do it. So I think that's also part of the beauty of industrial or commercial real estate. It could be a lot more hands off. But so speaking of leases, Greg, like what kind of lease terms are these usually, like year over year, 3 years, 5 years, 10 years, 50 years?
Yeah, every project's unique. But a typical, I guess for the smaller units, a lot of groups, a lot of investors, institutional landlords, and one-off landlords are comfortable doing 1-year leases that just renew every year. But for the majority of the leasing that I'm doing for anything that's say 10,000 to 10,000 and up, it's landlords now are saying, hey, this is a 5-year lease because they can. It's a 5-year lease with annual increases, and annual increases used to be based on CPI and actual economy, everything going up, but now they're kind of fixed numbers. A typical increase might be 3%, 3-4% per year baked into a lease, at 5 years. And the landlord's typically not, at the beginning of the lease, they might have a capital investment to build out some office space, or provide, 1 month of free rent or something. But yeah, that's the typical structure.
Yeah, so 5 years plus. And then you could think about it this way: the larger the warehouse, the longer the terms. So that's generally how
and that works. Yeah, that's the way it works. I mean, from the landlord's perspective, and also from the tenant's perspective. I mean, imagine you're leasing 100,000 square feet. Well, you're filling that with a lot of product, a lot of equipment. It's costly to move.
Mm-hmm.
So it does make sense to do longer term leases.
Yeah.
Yeah, so it sounds like there's this, what am I trying to say? There's a lot more demand versus supply, kind of like what you're alluding to, Greg, but it's helping landlords get a lot more favorable terms and all that. I mean, what have you seen to be, like, what's driving these demand or these changes in the market?
I mean, yeah, I think it really comes down to the supply. I mean, supply and demand, right? There just isn't. If you start looking at, projects that have been built, I mean, deliver. Here, I'll back up a little bit
Well,
more.
I mean,
So,
let's focus on the demand side for a second, right? I mean, assuming supply, it takes forever to get things
yeah,
entitled and it's expensive to build. But the demand side, what are some of the things, macroeconomic or macro factors that you're noticing that's driving the demand for industrial?
yeah. I mean, even right now, I mean, you look at big companies like Amazon. I mean, Amazon has a huge footprint. Are they driving the macro um, warehouse? I mean, yeah, I guess to some extent, but it really comes down to kind of this even some e-commerce. I mean, that's those are buzzwords, but it's true, it's real, especially out where Jenny is too. I mean, they're taking down large chunks of space for inventory, also not necessarily um, trusting all the overseas shipping and wanting to keep more inventory here. So a lot of groups, a couple of manufacturing groups I work with, um, they've gotten by. For example, one group they're getting by with 50,000 square feet, and they had about 20,000 square feet of that was for their inventory and material to actually make, and now they need they want another 30,000 so they can store more inventory and so they can be ready to make products when they need them. So I think that's just even though our shift, maybe even in some ways, even that's happened. I mean, it's been happening for a long time and maybe accelerated this year. um, is driving some of that demand.
Yeah, I mean, just like people staying home, people are ordering different, like workout equipment. I've had to help some people, that they just decided, hey, they saw the demand for this, so now they're looking for space. So, yeah, but I think generally there's always less supply in this sector, but there's always people looking for space. So they end up, storing things in their garage or until yeah. So there's just not enough supply.
Yeah. How are we doing, everybody, so far? Are you guys finding value in this? If you are, just give me a quick nod or type in the chat. Just put
Or
in
little
put in dollar signs in the chat.
I just want to add a quick note too on that, on the demand or supply, whatever you want to call it. I mean, right now, obviously, people aren't they're working from home. They don't need their office space necessarily. The industrial sector and what's kind of been somewhat protected is, you think about a warehouse or you think about a manufacturing building, you need that physical real estate to get your job done, to run your company. The office space, where we can do it somewhat remotely. I guess there's disadvantages to that, but the warehouse manufacturing space, they need that building, they need that space, they're using it. So
should we answer?
Yeah.
Yeah, no, that's good. Good insight, Greg.
Okay.
Jason, should we answer some of the questions on the right? Or
Yeah, I'm gonna I have some time reserved for the questions. What about, I know this is further out here, but there's a lot of talk about e-commerce, and I think the biggest sort of catalyst or technology change that in this space people are talking about is autonomous trucking. I'm just curious, either one of you can start first, but what kind of impact or what kind of changes would you see from if this, one day the autonomous trucking becomes a thing? Is that going to increase the demand or decrease, or just something completely different kind of need to fulfill these logistics needs?
Go for it, Jenny. How are you with sci-fi? Although it is real.
I guess if it does get to that point, I mean, I already can see a lot of things changing in how people are, autonomy and all this stuff. East, the industrial sector, a lot of people are trying to tap into more east of Los Angeles, so like the Inland Empire. So maybe that, because there's just more space out there. If you think about certain areas of the industrial cities, they are pretty saturated. So if we did need more space, I mean, there's a lot of development happening more east. So that's something
Yeah.
you can see. I mean, it's actually a growing economy out that way. People are still trying to figure it out though, in my opinion.
Yeah,
Right?
definitely. So we run the analysis, right, for do I need to be by the port, or do I need to be by this location? What if I have my warehouse out in the Inland Empire? Um, you know, gas prices, you know, is the number one kind of driving, you know, differentiator there. But if you throw in the fact that now we have autonomous drivers and we don't have to pay for the people to drive it out there, in the same way, I mean, yeah, I think everything is going to be growing out to more property, because it just doesn't cost as much. I mean, maybe it takes an extra hour or two, but you know, it costs so much more money to have that warehouse, you know, in LA or in Orange County. So I think another thing that's in premium in all of our markets is yard space. I mean, especially LA and Orange County. You know, there's still trucks, right? You still got to park them somewhere, regardless of who's driving them, or not driving them for that matter. So yard space, you know, if you're looking to invest, I mean, that would be something.
Yeah.
You're not going to be the only one looking for it, but if you found a property with a secured yard or the ability to do that, those are the gems right now. Those are, you know, have multiple requirements for people looking for yard space, and willing to pay. It's basically the same amount per square foot that they would for an actual building. So
just to park there.
Yeah.
Right.
Yeah, so it sounds like it's possible if autonomous trucking or driving is a thing, you don't really need to be so close to kind of the last mile, so you could potentially move them out further out. But what about the other thing? Again, I know it's kind of forward-looking or more sci-fi. That last mile, there's a lot of people talking about retail being repurposed into industrial. How would that work, or like what kind of stuff would you need to do to convert them into you know, being able to use for mini warehouse or last mile fulfillment centers kind of thing?
I guess just tear everything down. Because
have the tenant do it. No, you don't have to.
Actually, oh yeah, just guys, come on. No, I'm just kidding. I mean, it's easier to build a warehouse space versus a retail space, in my opinion, right? You just think about
all those retail. I mean, look, maybe there'll be groups that in certain pockets that do that, but I mean, it's just that space is too valuable to you know, park inventory in it, make it a storage facility. But you know, hopefully we come up with better uses for that retail space, I think.
Yeah. I mean, if you go to downtown LA and check out some of the really older properties that have been repurposed, that, you know, could give you an idea to what could be done. But, you know, I'm not sure what's going to happen with retail, to be honest. It's been on a downward trend for a minute.
Okay, cool. Well, we're going to go to the questions here. If you have more questions, feel free to type them in the chat. I'm glad to hear everybody's finding this valuable. Let's see here. So inventory is low, supply demand is out of whack. What advice do you guys have for people to help get their offers accepted?
I mean, I don't know if this is, well,
other than paying $1 million over listing and cash.
How do you get your offer accepted? Just pay a lot more money. No, I mean, good question. It's things are moving fast, right? And so I think you just have to be willing and ready, be pre-approved. Is probably the number one best answer, I guess. Just so you can act quickly when that does come around. And yeah, even in this environment right now, it's, you know, people are kind of hit the pause button, right? So they're not necessarily accepting offers that are asking for big discounts, or discounts at all, for that matter. You know, that may start to happen, but I don't, you know, there's not a lot of room.
And to touch upon what Greg said, a lot of times I do get people that want to purchase or invest in a property and they come to me first. The smarter thing to do would be to contact a couple of loan officers and see what you can get pre-approved for.
Okay.
That's
So
just
yeah,
the simplest way.
just be prepared basically.
Yeah, because I can find you the space you want, right? Even Greg can, right? But when you get down to it, can you really afford it? And sometimes, yeah, I think people kind of do it backwards. So a tip would just be actually get connected to more loan officers and
Okay.
what you can do there
Right.
first.
Valuation and cap rate for the more specialized properties like cold storage or food processing, maybe some of the stuff that needs more amenity. How do you guys approach this, or is there any kind of general rule of thumb on how you value these type of properties differently than a regular just a shell warehouse?
Yeah, definitely. I mean, I think it comes down to its construction cost, its improvement cost. Like, what did it cost to improve that building, right? I know the number, and I don't know if Jason, if there's a way to follow up, but I mean, off the top of my head, to improve, let's just call it a shell warehouse space and make it a cold storage facility, it's going to be north of $60 a foot, just to make those improvements. So, that plus the markup value. I mean, yeah, so it's a much more expensive building based on what it costs to get there.
Okay. Any experience on that end, Jenny?
I did actually. One of the main problems that I faced with trying to go into this type of space or turning a like a shell space warehouse into a cold storage facility, and people are processing different types of food there, is you need drainage, right, and gas. These all need to be, it goes through, Jason, you could talk all day about this, right? There's a process. You can't just put in some drainage and call it a day, right? You got to get approval from the city. You got to draw up plans. You got to make sure the owner's okay with it. So if you guys become a landlord, right, are you going to approve this, right? Is this all going to be done to code? Not to mention the costs. So if you're thinking about turning a regular shell space into a cold storage facility, I definitely wouldn't recommend it. A lot of times what I've seen is maybe you could go the other route, right? If you have a cold storage warehouse, maybe you can close up the drains and use it as an e-commerce warehouse facility. But I definitely wouldn't recommend it the other way around.
Okay.
Yeah.
Touching on the financing or getting pre-approved earlier, it sounds like maybe you just talked to some lenders earlier, Jenny, but if you have if you have investment experience in other asset classes, say apartment or, I don't know, regular retail commercial, does that help you to get pre-qualified or to get qualified for these loans? Or do you feel like lenders specifically want to see industrial investment experience?
I don't know, not necessarily. They just have a list of things that they need from you to see if you can qualify. So, I mean, I'm gonna guess that if you do have some experience, it does help you. But again, it depends on the bank, right? Depends on who you're talking to. I wish I can give you more, but yeah.
Yeah, every banking relationship's different, and that's like, I mean, unless you have hundreds of millions of dollars with them, they're going to look at a lot of people the same, and you got to qualify through each asset.
Mm-hmm. And I don't know if you guys would know this as well. Maybe it sounds like you do have some ideas from being exposed to your clients and stuff, but we talked about converting or adding cold storage, but what about just the regular build costs, land aside, what would be the hard cost to build an empty warehouse or erect an empty warehouse?
Just like a tilt-up construct. I mean, if you found a piece of dirt and you wanted to build an industrial building on it.
Yeah.
Today's numbers, I don't know. Today's numbers are probably closer to 150 plus per square foot. I mean, I remember, 10 years ago, it was probably more like the less than $100 per square foot number. So yeah, and there's class A buildings and all the way down to class C, D, F buildings. Yeah, tilt up concrete, let's call it 20-foot clear, 20 plus, 24-foot clear height. Mm-hmm. Yeah, 150 plus per square foot.
Okay, that's SoCal numbers, kind of.
Yeah, you might want to inflate it even.
Your mileage might vary.
Yeah. Yeah.
What about you, Jenny? Have you had this kind of experience or seen or hear these numbers before?
I was gonna say somewhere in the hundreds. Yeah, probably best to talk to a contractor about something like that.
Okay, cool. What are some zoning issues that people run into? Maybe like for flex, does it need to be very unique zoning, or what about? I don't know if we want to get into the whole cannabis conversation, but in general, what are some zoning things that people should watch out for?
Zoning,
Parking. I mean, parking is I think a big driver when it comes to.
How is the parking requirement calculated? Because like retail, usually they say, restaurant is 10 per 1,000 square foot kind of thing, but industrial, it's just straight square footage, or how many, 18 wheelers, or what are they?
Yeah, it's different. That's where it gets, but it's typically, you look at it, it's a 2 parking spaces per 1,000, and that's usually the kind of rule of thumb for the industrial market. Yeah, so if it's 100,000 square foot building, you've got 200 parking spaces.
Okay. Jenny, you concur?
I was gonna say 1 per 1,000. I've seen that, but it depends.
I would. I mean, parts of LA, probably are 1 per 1,000. I mean, Orange County, absolutely, you're not gonna do anything less than 2.
Yeah. So this is where I mentioned looking at what city you're looking to invest in, because at the end of the day, the city is going to decide what you can do with your building, right? So even with parking spaces, it depends on what the city says.
Yeah, and if you wanted to convert it to flex and add more office space, that will, that parking requirement will limit what you can do, what you can't do.
Mm-hmm. Yeah.
Okay. Cool. Well, we're approaching the top of the hour here. Any parting words or advice? How can people get hold of you? And actually, what are some books or additional resources for people that want to learn more about industrial real estate that you have for folks?
It's hard to really say, because even if you do take these courses, it's like going to college, right? You get your degree in the degree that you're supposed to get it in, and then you actually try to do it and you realize it has nothing to do with your degree. So if you do want to spend the time to do these things, I mean, there's tons of things on YouTube, the CCIM courses, but that, you have to have a real estate license for that. But CCIM courses are very tailored towards, this type of stuff. Greg?
Jason, I should have prepped for that one. School of Hard Knocks.
There's no industrial real estate focus.
I don't have a
podcast or blog or somebody's putting together, or you're secretly working on, Greg?
No, not yet. I'll let you guys know.
The best thing to do is just schedule a one-on-one with Greg.
Yeah, right.
Or myself.
But yeah, honestly, and to Jenny's point, like, look, this is, I mean, in some ways it's simple, right? There's it's a building. It's real estate. You guys are familiar with how to look at buildings, but yeah, to find these assets, to find what's out there. It's, you know, Jenny and I, we're doing it every day, all day long. And that's really, you know, that's really what it takes. And we have access and we pay for, you know, MLS services. So if you're a landlord, right, and you want to sell your building, you want everyone to know about it. And so these buildings are being marketed, right? There's always this idea that there's pocket listings, and sure, there are moving pieces that happen, but it's not because necessarily a pocket listing. It's because there was a buyer that was presented to a seller who wasn't even planning on selling, and now he's going to sell. Pocket listings, you know, if you're a landlord and you agree to let your broker do a pocket listing, you're doing yourself a disservice. So everything's out there on the market. You know, you can dig up things that are, you know, opportunities that maybe there wasn't even on the market. A seller didn't want to sell in the first place, but you start soliciting, sending them letters. It's a project you need, you really like. You know, that can happen that way too.
Yeah, I've had to do that with some of my people who wanted to invest, and just reaching out to people that had the right zoning. And a lot of them did respond. Sellers that, well, they weren't sellers, they just owned the property. Just sent them some letters to see if we can do something there. So that's where, you know, if you want to contact Greg or myself, like, we can assist in doing that, because yes, you can do it yourself, but with investing in a warehouse property or any like bigger commercial properties, it really does, there's a lot of value in having a team around you. So, and you guys, because you guys are investors, so you all know that, you know, you don't know everything, right? You have someone that knows all this stuff. So,
and this is an asset class too, where you look at a lot of these projects that are attractive that you'd want to own. They've been owned for a long time, and they've gone through passed through family trusts and different things. So, yeah, getting to that right person sometimes takes a little legwork.
Okay, great. Well, thank you guys so much for your time today. I mean, this is so useful, and, you know, just not something that gets a lot of coverage, to be honest. And, you know, like I said, I see it in the data and all around me too. You know, the e-commerce, it took the 8 weeks while we're in COVID to grow the same amount it did the past 10 years. And I don't think that kind of behavior is likely to change anytime soon either. So I'm really glad to have you guys to be able to come on, share with us your experience, your knowledge, and kind of some of the tidbits and the dirty secrets of how things work in this industry. So feel free to type in your contact information for folks that want to get a hold of you, or if they have other questions, or enlist your services as well. And for everybody as well, if you want to type in your Instagram handle, website, or if you got a podcast, is Sean on? Yeah, Sean's here. So what's up, Sean? You know, feel free to include that in the chat, and folks can save that chat transcript to connect later. Right now, we're going to transition to our breakout sessions here. I'm actually going to stop recording and all that.